Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard to borrow stocks and potential short squeeze candidates. Today, we're taking a close look at a very specific name that popped up on our screeners, BJDX, BJDX Inc. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's jump right into BJDX Inc., ticker BJDX. This is a microcap company operating in the healthcare and medical devices sector. The core offering is the Symphony technology platform, which includes an analyzer and single-use protein detection cartridges. These are designed to provide rapid, precise measurements of key diagnostic biomarkers found in blood. Essentially, BJDX is aiming to streamline and improve diagnostic testing. What is cost to borrow and why it matters? Now, when we talk about a stock being hard to borrow, what exactly does that mean? It refers to the difficulty, and therefore cost, for short sellers to borrow shares of a particular stock. If you want to short a stock, you first need to borrow shares, sell them, and then hopefully buy them back later at a lower price to return to the lender. The fee you pay to borrow those shares is called the cost to borrow, or CTB. When this fee is very high, it signals that demand to short the stock is elevated, but the supply of shares available to borrow is extremely low. These fees can easily exceed 100% annualized, meaning short sellers are paying a premium just to maintain their position. Show chart illustrating CTB conceptually. Why this stock is hard to borrow right now. So, why did BJDX catch our attention? Our hard to borrow screener flight, BJDX, primarily due to its astounding cost to borrow fee, currently sitting at 745.4% annualized. That's not a typo, 745.4%. Highlight CTB number. This tells us that short sellers are paying a significant premium to bet against BJDX. The estimated float for BJDX is also quite small, at approximately 0.9 million shares, which can amplify price movements given enough buying pressure. While we don't have CTB momentum data or the exact number of shares currently available to borrow, that sky-high fee is a clear indicator of scarcity. Our internal composite squeeze score, which factors in things like CTB, float, and momentum, places BJDX at 40.5 out of 100. Looking at recent price action, BJDX is down 2.19% today, down 10.57% over the last 5 days, and down 35.24% over the last 30 days. Volume has been significantly below average, with today's volume at 151,300 shares compared to a 30-day average of over 5.1 million shares. This means relative volume is effectively 0x average right now. Squeeze mechanics explained. A short squeeze occurs when a stock that has been heavily shorted begins to rise in price. As the price goes up, short sellers start to face mounting losses. If the CTB fee is also very high, their costs escalate quickly. This combination can force some short sellers to cover their positions, meaning they have to buy back the shares they borrowed and sold, regardless of the price, to limit their losses and stop the bleeding from the borrowing fees. This forced buying creates additional demand for the stock, pushing the price even higher, which in turn can trigger more short sellers to cover, creating a cascading effect. That's the essence of a short squeeze. Dilution risk check. One critical factor to consider when looking at potential short squeezes is dilution risk. Dilution happens when a company issues new shares, increasing the total number of outstanding shares. This can effectively offset or negate the short squeeze thesis because it increases the supply of shares, making it easier for short sellers to find shares to borrow or cover their positions, and it can depress the share price. In the case of BJDX, a check for recent dilutive SEC filings, specifically S-1s, S-3s, or 424 BS, within the last 90 days revealed no such filings. Additionally, we found no recent reverse splits for BJDX in our look-back window. This is a positive sign, as it indicates the company hasn't recently flooded the market with new shares or artificially inflated its price through a reverse split. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. It's crucial to remember that a high cost to borrow, even one as extreme as BJDX's 745.4%, does not guarantee a short squeeze. Sometimes, a high CTB simply means that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions, believing the stock will ultimately fall significantly more. For BJDX, with its current low relative volume, a significant uptick in buying volume could be noteworthy. Watching for a sustained increase in volume coupled with positive price momentum could be early indicators to consider, but again, this is not financial advice. BJDX, BJDX Diagnostics, Inc., is definitely an intriguing name for those interested in the hard-to-borrow landscape, primarily driven by its incredibly high annualized cost-to-borrow fee of 745.4% and small float. While the conditions for a squeeze exist in terms of borrow costs, it's essential to remember the broader context of its micro-cap status, current low volume, and recent price depreciation. Always do your own thorough due diligence before making any decisions. If you found this breakdown helpful, please hit that like button, subscribe for more deep dives, and let us know in the comments what other hard-to-borrow stocks you'd like us to analyze next.